This is the Equity Management Academy Weekend Podcast for May 28, 2022. Gold, grains, and raw materials prices to skyrocket. Summary. As the Fed begins to move to raise interest rates, the economy is going to slow down. Until we can replace the lost grains in raw materials from Ukraine and Russia, prices are going to skyrocket. We also have an energy crisis as Russian oil and gas comes off the market. We appear to be near a major bottom in commodities, digital assets, and precious metals. Fundamentals. As the Fed begins to move to raise interest rates, the economy is going to slow down. In California, to fill your gas tank can cost more than $6 a gallon. It is the highest it has ever been. Inflation is here. It is almost a tax on economic activity. We are coming out of a pandemic with short supplies because everyone reduced their inventories as a result of the pandemic. Demand has been much higher than expected. Then Russia invades Ukraine and eliminates about 30% of food production in the world. Now we have a geopolitical crisis that is wondering where the supply situation is, worsening the supply chain situation. We have shortages of zinc, palladium, and the price of food is rising quickly. Soybeans are at $17.59 a bushel, and it looks like soybeans are ready to take off to a whole new level. Beans in the teens, $20 soybeans are in the realm of possibility. Wheat reached $13.63. Wheat Ticrium Wheat Fund, wheat came back down and now is roaring back up in a new cycle. Wheat will probably reach $14 or $15 a bushel. And the fundamentals support that technical analysis. Until we can replace the lost grains in raw materials from Ukraine and Russia, prices are going to skyrocket. We also have the energy crisis as Russian oil and gas comes off the market. The Fed's dilemma. Amid all these pressures, the Fed cannot raise interest rates without pushing the world into an economic recession. The damage had already been done as the 10-year note rose from 0.33% in 2020 to more than 3% now. The move has already affected weak borrowers who use the free money provided by the Fed to build a bubble in various markets. As rates have exploded, we have seen a tremendous deleveraging in digital currencies. Once the dust settles, the survivor of the digital asset realignment will be Bitcoin. Economic landscape. We are living in a complex time. In some areas we have stagflation, in others inflation, in others hyperinflation, such as in food, commodities, and energies. We appear to be near a major bottom in commodities, digital assets, and precious metals. It is offering tremendous opportunities since this volatility allows you to invest when many assets are at bottoms. Many markets appear to be getting ready for a major move to the upside. If you know how to monetize this crisis, you can greatly improve your financial situation. To taper or not to taper? The Fed balance sheet is around $9 trillion. The Fed is talking about tapering, taking money out of the system. In this environment, we do not see how the Fed can do that. The Fed is behind the curve. The market is dictating the interest rate. The 10-year note is already way up in the past couple of years. The Fed does not control that rise. Standard deviation and reversion to the mean. Gold. Gold Spider Gold Trust ETF GLD completed the daily target of 1861 for May 27, 2022. The weekly variable change in price momentum indicator, sell 1 level of 1867, was also completed. Gold has completed a reversion to the mean and has met the daily pattern. When the daily pattern is completed, it goes neutral. There is resistance now in the gold market. The artificial intelligence in the VCPMI identifies the pattern and levels where it best to trade. The extremes above sell 1 and sell 2, or buy 1 and buy 2. The mean price for the day, week, month, or year. Gold closing below the sell 1 level begins to identify the reversion to the mean. Silver also made a new high of 22.47, meeting the daily sell targets before coming back down, which activated the daily short targets of 22.15 and 21.94. If you are long the NASDAQ, we recommend that you take some profits hedge or lock in profits. VCPMI Artificial Intelligence. The VCPMI helps eliminate the emotional input into trading. You want to use a robotic approach to eliminate that emotion. The VCPMI can replace the emotion of execution so you can focus on highly probability trades. It is not right 100% of the time, but it provides you with entry and exit points for high probability trades in the 90-95% range. You can use the VCPMI for day, swing, or position trading.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.